はい、皆さんこんにちは。私はマネックス証券のハチこと岡本平八郎です。今日はマネックス証券のスタジオの方には、ETF 運用会社大手のGlobalX、ニューヨーク本社の方からですね、リサーチディレクターのペドロ・パランドラニさんにお越しいただいています。Hello, Pedro.
Hi. Thanks
Welcome to Japan. Welcome to Manex.
Yeah, no, love to be here. Thanks for having me.
Can you please introduce yourself, what you do at GlobalX?
Absolutely. I'm Director of Research at GlobalX ETFs. I focus on thematic investing, which is GlobalX's bread and butter. I'm lucky to lead our team of research analysts that are focusing on all of these disruptive technologies, changes in people and demographics, changes in the physical environment. So I lead, and again, I'm grateful and lucky to lead our team of research analysts that do focus on all of these disruptive technologies and innovations that are changing our world.
What would you say are the unique features of GlobalX?
Great question. To start at GlobalX, we've always focused on bringing to market unique and unexplored investment solutions, right? And of course, like I said before, our bread and butter has been for many, many years thematic investing, right? Just for context, back in 2010, we launched our lithium and battery technology ETF. That was well before electric vehicles were actually a thing or starting to gain adoption. In 2011, we launched our social media ETF as well before even Facebook, now known as Meta Platform, IPO'd. So at GlobalX, that's always been our core strategy, bring to market these unique and intelligent and unexplored investment solutions. And thematic investing clearly has been a focus for the company. Now we have over 37 different thematic ETFs offering exposure to everything from robotics and artificial intelligence to cloud computing to blockchain technologies and so many other different strategies. So that's been definitely kind of the key of the success of GlobalX.
So you are thinking ahead, and also you now are also thinking ahead going forward.
Absolutely. And again, we haven't stopped bringing to market new ETFs, right? Just recently, we launched our Metaverse ETF, our blockchain technology ETF. We're bringing to market many of these disruptive technologies that are really innovating the way we work, the way we do pretty much everything, right? And I think that's kind of quite unique for our firm, really trying to think long-term, identifying those structural trends that are changing every single sector in our economy. And I think we can all agree that our economies in every single sector in our economy is facing a lot of disruption, from healthcare being disrupted by genomics and telemedicine and digital health, to the industrial sector being disrupted by robotics and artificial intelligence. Everything is facing a lot of disruption and innovation, and I think we as investors definitely need to try to recognize those investment opportunities.
You know, basically there are two types of investment style, passive and active. How should investors think about having a thematic investment theme in their portfolio?
I think there are merits to both strategies, being honest. And I think when it comes to thematic investing, both active and passive strategies do share the same vision in that the world is going to be different in the future. Like you said before, the world is changing and we need to try to anticipate those changes as investors. So at GlobalX, we've always approached thematic investing from the passive side of things. And the reason why is because we believe that it's very hard for investors to actually identify who are going to be the winners and who are going to be the losers in all of these thematic investing ideas and trends that are shaping our world. And I think historically that's been the case. It's very, very hard, especially in these very early stage themes, to identify the winners, to identify the losers. And we need to acknowledge that's going to happen. We're going to have companies that are going to benefit, other companies that are going to try and perhaps are not going to make it.
Right.
So at GlobalX, we followed that passive strategy, really trying to identify the universe of companies that stand to benefit. And we are essentially implementing a market cap weighting scheme that essentially allows market dynamics to dictate which company should have a higher weight within our funds and a lower weight as well within our fund. So that's a much better approach than something like an equal weight strategy that ultimately sells winners and buy losers at each rebalance. And on the active side of things, that could be a very risky strategy if you're trying to identify those winners. And if you don't really do that, you're definitely exposed to huge drawdowns in your strategy.
And how often do you rebalance your portfolio?
It really depends. For those themes that are in the very early stages, we try to have a higher frequency of rebalances and reconstitution, just trying to adapt to the dynamics of the market. And if there are a lot of IPOs, or we anticipate to be a lot of IPOs, then having that quarterly frequency allows us to capture those companies. But usually I would say the average of our thematic ETFs would be semi-annual. So twice a year, we have that rebalance and reconstitution approach.
Okay. Explain to us a little bit about your rule of rebalancing.
Sure, absolutely. So essentially, something that it's very important for us is identify pure play companies. And what I mean by pure play, right? By pure play, we're essentially trying to identify companies that generate at least 50% of the revenue from the theme in regard. So if we're talking about robotics and artificial intelligence, what are the companies around the world, globally, that are really generating at least 50% of the revenue from robotics and artificial intelligence? So that's very key for us. So we definitely try to keep an eye on those companies. And if a company were to drop below that line, then at that rebalance would be excluded of the fund. But at the same time, new companies could come in. And at the same time, the idea is to try to include companies that come to market, whether that's an IPO, whether that's a direct listing. Recently we had a lot of SPACs as well. So that's definitely the idea, trying to identify those pure play companies. And I think that's something that differentiates GlobalX then from other ETF issuers, right? That pure play approach, because we believe that investors are really trying to get pure play exposure to themes. So another example is cybersecurity, right? Investors want exposure to cybersecurity companies, and perhaps by investing in tangential companies with little to no exposure to cybersecurity, that might dilute your overall allocation. So that's definitely be key for us at GlobalX.
How one should think about, which ideas they should invest in?
Absolutely. Well, our goal is to provide exposure to investors, right? If someone wants to invest in the metaverse or someone wants to invest in e-commerce, social media, we're giving investors access, the exposure, the solutions, right? But at the same time, our research team acknowledges that there are certain times where some strategies may actually be poised to benefit in the short term. At the end of the day, we believe that most of these thematic strategies are going to benefit over the long term. But in the short term, like now in 2023, I think we need to be selective. And if there's a word that I'm telling investors right now, it's selective. Because if you think about it, 2020, 2021, it was a couple of years where a lot of these thematic strategies were working out very, very well. No matter which one you choose, they were working well. 2022, and 2023, it hasn't been the case, right? So I think investors need to be selective and start recognizing what are those strategies that are best positioned, not only for the long term, but also in the long term, and identifying those key tailwinds.
So the viewer of this, conversation is interested in GlobalX product, how he should or she should do next? I.e., they should go to your homepage and study. What is your recommendation?
Absolutely. So you can visit our website, globalxetfs.com. We also have a Japanese version. You can also visit on our social media accounts, from Twitter to LinkedIn. You can find us on every single social media. And we have, on our research team, we have an open architecture. We're constantly publishing our research pieces to really educate clients about many of these thematic strategies that we briefly mentioned today. And again, it's open architecture. Everyone can get access to our research and trying to get a better understanding of many of these different thematic strategies.
So, you are not in a position to make a recommendation as to how much one should have a thematic investment theme in a portfolio. Having said that, though, what is your recommendation?
Good question. And at the end of the day, it really depends on the risk profile of an investor. But generally speaking, just assuming like a very traditional asset allocation, we often recommend between 5 to 10% of your equity bucket within your portfolio. So assume your 60-40 traditional portfolio, 60% being in equities, 40% fixed income.
So 10% of that 60%.
Of that 60%.
In a thematic investment.
In thematic investing. So it really gives you diversification because thematic investing is global by definition. So it gives you that global exposure, but at the same time allows you to hedge for disruption that traditional sectors in your economy are going to face, right? So say that you have perhaps an overweight or underweight to something like financial services, and you have a small portion of that allocated to fintech, that theme that it's disrupting financial services is really allowing you to hedge all of that disruption the traditional financial services firm may face.
So reduce the financial weightings, increase or create a fintech exposure using your ETF.
Exactly, a satellite approach paired with that core equity allocation. It could be your sector equity allocation or just broadly speaking, to your core equity portfolio?
You know, in Japan, some investors trade these thematic investment vehicles. What do you think? Is that a good idea, or they should think differently?
I think investors should think long term. To be honest, I think timing the market is very hard. I would actually recommend dollar cost averaging strategies. That's something that for retail investors and even institutional investors tend to follow. And again, when it comes to thematic investing, I think we all can agree that this is about capturing the next 10, 15 years of disruption, whether it's electric vehicles, whether it's artificial intelligence or cloud computing. It's going to take time, perhaps 10, 15 years. And if you're trying to time the market over short time frames, you may not be in a good position. So I think thematic investing especially should be part of your strategic asset allocation and not really trade that on a daily basis or tactically.
So stay invested. Think long term.
Think long term, dollar cost averaging. I think that's a good strategy.
Okay. Are there any themes that you want to highlight for the viewers here?
Absolutely. I talked about being selective before. So I think right now, themes like robotics and artificial intelligence, themes like lithium and battery technology, themes like U.S. infrastructure development are very well positioned to benefit, again, not only in the short term, but also in the long term. Starting with robotics and artificial intelligence, not only we continue to hear in the news about generative AI and ChatGPT is definitely becoming a buzzword, but I think there are definitely a lot of merits to that technology. We're seeing a lot of improvements when it comes to content creation, summarization. If you're a software developer, you're now being more efficient than ever by having generative AI platforms or systems. So I think robotics and AI, also driven by tailwinds such as a very strong CapEx cycle. Capital expenditures continue to grow very healthy, especially in the United States. The reopening of China, reshoring trends, companies bringing back manufacturing capacity to the Western world. I think a lot of trends are really serving as tailwinds for robotics and AI. The second one that I mentioned, lithium and battery technology, very well positioned to benefit from electric vehicle adoption. So instead of investing in electric vehicle companies, a sector that's definitely becoming very, very competitive, why not invest in the supply chain behind electric vehicles, right? Those companies that manufacture the batteries and the companies that get access to lithium, lithium being that key common denominator across every single battery technology. I think for many, many years, the United States underinvested in infrastructure development, and now we're seeing that the infrastructure in the United States is at a critical point, and now we're seeing a lot of fiscal stimulus going after this issue. In November 2021, the government passed the infrastructure bill, over $1 trillion of spending to really boost the infrastructure in the United States. So investing in the companies that are involved in construction, in engineering, in transportation of these key raw materials are definitely very well positioned. So those are three strategies that I would definitely pay attention to. No worries.
How many ETF can Japanese investor invest in of GlobalX?
Absolutely. GlobalX has on the TSE listed 13 ETFs and US listed over 20 different thematic ETFs.
So you talked about the dollar cost averaging method. Can you elaborate a little bit how Japanese investors should start implementing your strategy in their portfolio?
Yeah, so the idea of dollar cost averaging is really investing small amounts of money over a long time, right? So again, instead of investing just at one point in time, the idea is to break down that investment over the long term. So it could be on a weekly or monthly basis, but the idea would be to have small amounts of contributions towards different strategies regularly. So over time, as the market fluctuates, you're definitely going to buy perhaps sometimes at very high levels, sometimes at low levels. And we all understand that the market is going to fluctuate, right? And over time, that dollar cost averaging could help you instead of just owning shares of a company or fund or an ETF at just one point in time. So dollar cost averaging over the long term could benefit definitely your portfolio.
So one should decide, for example, to invest, let's say, $500 every month. So buy the ETF that they decided to invest in, $500 worth of ETF at the end of each month, for example.
Exactly. Monthly frequency could work great. And again, it could be 500 or it could be less. It really depends to the investor and how much can they contribute. But having that frequency, regularly investing over the long term definitely allows you to accumulate wealth.
And it is important not to stop investing.
Absolutely. And diversify. Diversify is also another key characteristic.
All right. Thank you, Pedro. It's been very educational.
Thank you, Okamoto-san.
Good to have you.
Thank you.